down with you today. So verified approval letter is essentially a fully underwritten approval looked at by an underwriter.
Okay.
So some differences are, with traditional mortgages or traditional purchase of a home, you need a pre-approval letter or a
Yes.
pre-qualification letter. And those are different than a verified approval letter.
Okay.
So some of the differences are a pre-approval letter. Uh, Essentially, a lender says, okay, well, we may let you borrow money. We may not let you borrow money. We're not sure yet. So you supply them with, they run your credit, right? First of all, they run your credit. Then they ask you for a tax return, maybe a pay stub, maybe a W-2. And they look at that and say, okay, yeah, well, we'll probably lend you the money to purchase this property. But it's not guaranteed. It's not a guarantee that you'll get the money.
Okay. Now it sounds
So
similar to a DU approval, a desk underwriter approval.
it is a desktop underwriter approval, yes, but desktop underwriter approval does not necessarily verify everything, your financial items that you supplied. So the desktop underwriter is not going to verify your income tax return. They're not going to verify your employment. The only way to do that really is to get into a full underwrite, where the underwriter actually gets your entire file, 2 years tax returns, 2 years W-2s, 30 days of pay stubs, 2 months of bank statements. They get all of that and they verify your tax returns. They verify your employment. They verify that you have the money in the bank. So once they verify all of that, then that's what's called a verified approval letter. They can now say with certainty, okay, you definitely qualify for this amount of money. We've looked at your tax returns. We've looked at your pay stubs. We know that you can pay us back. So we will give you the money to buy this home. We will lend you the money. They won't give it to you. They'll lend you the money to buy the home or investment property.
Okay. Okay. Now you had mentioned before there were private parties that were providing loans. This is not having to do with that, right?
No, not at all. Not at all.
Okay.
These are your traditional lenders. These
Okay.
are your traditional lenders that most people hear about.
Okay. Okay. And so the advantages that in your mind, the advantages if someone has this verified approval letter as opposed to a pre-approval letter is in terms of what's the main advantage?
So with a pre-approval letter, again, when you go, like if you want to make an offer for one of your clients and they say, I want to buy, Luis, I want to buy this home for, this amount of money. And when you make that, when you put in that offer, you typically want to have a pre-approval or a pre-qualification letter with that offer, which really tells the seller of the property, hey, this person is serious about buying my property. They may not have the money yet, but they're actually looking into getting the money in terms of a loan to buy my property. With a verified approval letter, you're telling the seller, hey, this person has already qualified for the loan. There's no question that they will qualify for the loan. The underwriter has verified their income, their tax return, everything's been verified. So you're coming in with a much stronger offer.
Okay. And there's still when they make the offer, it's not a cash offer, so there is an appraisal and loan contingency.
Right. There actually is no loan contingency. You can remove that because the loan itself has actually already been approved.
Okay.
Now, you still have to have an appraisal contingency.
Yes.
That tells you the value of the home because most lenders, really all lenders, want to know that if they're going to loan you this money on certain purchase price, that the value of that property meets the sale price of the property.
Okay. Okay.
So
So the person is going to be able to make the offer and not have a loan contingency, but they will have the appraisal contingency until that's.
they will. They can. I mean, I've done some of these. with verified approval letters. One of the last ones I just did, we did the verified approval letter, and we were able to remove the appraisal contingency because it was not required. And it was through a very traditional mortgage lender. So their offer actually was not the highest offer on this home, but their offer was accepted because they went in without a loan contingency because of the verified approval letter, and without an appraisal contingency because, well, it wasn't needed. Appraisal wasn't needed for the loan.
Okay.
So what that did for the seller was say, hey, this person's going to buy my home. They still have the inspection contingency, which any buyer, I don't care if they're an all cash buyer, you're going to have an inspection contingency. You want to make sure that the place isn't falling down when you buy it, right?
Yeah.
And so they were able to remove the two biggest hurdles, which are the appraisal, the loan, and then the appraisal.
I see.
So
then they're making the offer without those contingencies, that they feel the value is there. And so that's a stronger offer to the seller. And you're saying that the seller has the assurance that it's going to close, and it's taken much more seriously.
Exactly. It was essentially like if they were an all cash buyer. So, all cash buyers come in and say, we don't need a loan contingency. A lot of times they don't even have an appraisal contingency. We just want, a 10-day or whatever day inspection contingency. And after that, we can even close sooner. Mm-hmm. So on this particular deal, the buyer's agent was able to make an offer with no loan contingency, no appraisal contingency, and a 15-day close.
Wow.
Right. So that nobody could compete with that. Even if they were offering $20,000, $30,000, $40,000 over the asking price, the seller went with my client because they were basically guaranteed to get the money.
Okay.
Right. Short of the inspection contingency.
I see. And so then the 15-day escrow, the 15-day close, how does that happen so quickly?
Well, that happens quickly because what takes time in pretty much any transaction, as far as a loan is concerned, is gathering all the documents from the buyer, verifying income, verifying tax returns. That can take some time. Then you have to order the appraisal, and that can take some time. Mm-hmm. We can't control how long the appraisal takes. I've run into situations recently where there was an issue with the appraisal, that has to get remedied. So that adds more time. So when you come in and don't have to deal with a loan contingency and an appraisal contingency, that gives you the freedom to be able to come in with a faster closing date. Okay.
That makes sense. And I represent sellers primarily, honestly. And like, we just got an offer for 45 days, typically 30 days. It's not very frequent that we have 15-day escrow period in an offer. So I can see how that can be, an advantage for that buyer.
Oh, absolutely. And the seller, who doesn't want their money sooner, right?
That's right. Is there any misconceptions with this program, or any concerns with getting this type of verified approval? That
I think
the buyer would be hesitant about proceeding with this, or having such a short window for closing and having no contingencies. Not no contingencies, but no appraisal or no loan.
Sure. So I think it's something that's relatively new. People just don't know about it, right? You didn't really know about it, right? Yeah. And you've been in this business for a while. And so most people just aren't aware of it. And so I haven't run into any hesitancy. In fact, right before we got on this call, I was speaking with a client, and we're doing a verified approval letter for a VA loan. Most people don't think of VA loans, being able to do this, but we were able to get a verified approval. So this veteran is going to be able to make an offer without a loan contingency. Now, we can't remove the appraisal contingency because VAs are a little different, and you do have to do the appraisal, but there will be no loan contingency.
Okay. What's how quick are they able to put their offer in terms of the number of days for the escrow period?
Well, since we're gonna have the verified approval, we could potentially close in 21 days. I mean, VA for this particular loan, VA appraisals can take a little longer sometimes. So I'm not gonna say, hey, they'll be done in 15 days. It could. We just don't know. But 21, I feel comfortable with, knowing that we can close, because we've already done the really hard part is getting the income verified. And you've been in this business a while, and you think you have this deal, it's a done deal, it's a great offer, appraisal came in, but guess what? At the last moment, the buyer doesn't qualify. Something happened in the loan process, and now they don't qualify. Well, when you have a verified approval letter, that doubt goes away.
Okay.
That they've already qualified for the loan.
I see. Now, if someone's interested, let's say someone watching this video is interested and they would like to get this higher level of approval to make their offers stronger, to make their offers more appealing to the sellers because they have a quicker close. What is the process? They're going to call. Let's say they call me, they call you. Then what is the next steps?
Sure. The next steps, at least the way we work is I would send them an invitation to our portal, and they would fill out a digital application through our portal, and then upload their documents right into our portal. It's a very secure portal, but you would need 2 years of tax returns, 2 years of W-2s, 30 days of bank statements. And the bank statements are the statements where your deposit and your closing costs are going to come from, right? So I didn't mention that gets verified as well. Making sure that you can actually afford to pay for what you say you're going to pay. If you say you're going to have a $100,000 down payment plus, I don't know, $10,000 in closing costs, the lender wants to make sure you have $110,000 sitting in an account readily available to be able to execute that transaction. So that all gets, so we need that information.
Yeah.
A copy of your driver's license, really all the standard documentation you would need for any traditional loan or any loan, FHA, VA, conventional, jumbo, whatever.
Okay. Now, what if someone says, hey, Alex, I just saw you, I don't really know you too well. I don't feel comfortable giving you my documents just yet, or filling out or having my credit run. Can we, meet, or can we talk about it more, or talk about the process more? What does that look like if someone says that?
Sure. No, yeah, I all the time. Typically, most of my referrals for buyers are from agents that I've dealt with and that have a high level of trust in me as I do in them. That they know that I treat their clients with great respect, and I communicate. I communicate all the time. As a matter of fact, I just picked up a client who is a realtor who was on the other side of the transaction. I represented, I did the loan for the buyer. They were the seller's agent, and they've been in the business for 25 years. And they called me and said, hey, we really like the way you work. You communicate. We knew everything that was going on the entire time. We didn't have a doubt. We didn't have to call you because you would tell us what was going on. And we're going to buy a new home. Can you do our loan? So that was like, wow, okay, I guess I am doing a pretty good job. If a realtor who's been in the business for 25 plus years wants to give me their business, their own personal business, not just their client's business. Okay. But yeah, no, so I'm more than happy to meet with someone and get on a Zoom call with someone, get on the phone with someone. I have no problem. I mean, I have references. They can, I have clients, especially military clients who have said, hey, if you ever need a referral, let us know. Other realtors who have said, hey, if you need a referral, just let us know.
Oh, okay, cool, cool. So then the way people will get in touch with you is through what's the best way to reach you? I'll put your
They can either, yeah, they can either call me. My phone number, and it's my personal cell. It is 626-422-9743. Or you can email me, Alex at accept-capital.com.
Okay. And then anything else that we're missing here that we didn't cover that you feel is important that you want to share about this?
Yeah, I mean, I think in this very competitive market place right now, you hear and everybody hears that there's not a lot of inventory, which is one of the reasons why you hear that home prices haven't come down, even though interest rates are up. And they're just, it's still a competitive market. You're still getting multiple offers on properties. So one way to have your offer stand out is to get a verified approval letter. It really does help. I've seen it firsthand with clients, and at this one client in particular was, called the realtor and said, "Why is he asking me for all this information? This and that, and why do I need to supply this?" And they were retired and had a pension, so I had to get pension information from them, right, as part of the verified approval letter. But then after their offer was accepted, the client called me and said, I knew I complained. I'm sorry for that, but I really do appreciate what you've done for us. And we got this home because of you. And so that was very gratifying.
No, that's great. It seems like a great opportunity. Hopefully, some folks watching this video take advantage of us, call us, and hopefully you'll be well taken care of.
Absolutely, 100%.